Quick disclaimer before we start. Everything in this video is my own personal opinion and analysis, not financial advice, and not a recommendation to buy or sell anything. Please do your own research before making any investment decision. Hello everyone, welcome back. Today is July 12th, 2026, and this is a different kind of Canada video from the one we did a few days ago. Instead of our monthly 20-25% target scan, we're running our precision target verification scan, a weekly strategy built around something called pivot confluence. Quick version of what this one does. Every stock has a weekly classic pivot point calculated from last week's high, low, and close, giving us a resistance 1 level, a mathematical ceiling for this week. We look for stocks whose price has climbed to within 90 to 100% of that ceiling, close, but not yet broken through. Then we check whether two other pivot methods, Fibonacci and Camarilla, land their own R1 levels in that same tight zone. When all three agree, we call that confluence, a much more reliable target zone than any single pivot method alone. If the stock also has Analyst price target coverage with real upside, that's an extra confirmation bonus. Today we scanned 5,028 Canadian stocks, and only 50 candidates survived our 5 filters. From those 50, here are the cleanest top 15. And this list has a genuinely striking pattern running through it. Nearly half of today's names, 7 out of 15, are not Canadian companies at all. They're Canadian Depositary Receipts, letting Canadian investors hold household names like Boeing, BlackRock, Visa, Chipotle, Home Depot, Nestlé, and Apple, all priced in Canadian dollars. Second, 0 of today's 15 names reached our top sharp target confidence tier, and none had Analyst price target coverage in our data. Every single name landed in the strong candidate bracket instead. Quick reminder, this is not investment advice, purely an educational breakdown of a systematic scan. Let's get into it. At the top of our list is AI, Atrium Mortgage Investment Corporation, a genuine Canadian company this time, a non-bank mortgage lender that provides financing to real estate borrowers who don't always fit the strict criteria of the major banks. That niche, filling the gap between traditional bank lending and higher-risk private credit, has made mortgage investment corporations like this one a popular income-focused holding among Canadian investors. Price is CAD 12.13, up 0.6% today, sitting at 99% of its weekly classic R1 of CAD 12.26, about as close to that ceiling as a stock can get without actually breaking through it. The monthly R1 sits just above at CAD 12.30, showing the weekly and monthly pictures are telling a very similar story right now. No Analyst price target coverage in our data for this one. Beta 0.49, notably calm, less than half as volatile as the broader market, consistent with an income-focused lender. MACD positive, technical rating strong buy, RSI 60.5, healthy, comfortably in the upper middle of our range, EBITDA down 15% year over year, but net income still up 3% with a strong 7.7% dividend yield. Exactly the kind of income profile investors expect from this type of company. Score 46, our highest today, a genuine Canadian lender leading a list that's about to turn heavily American. Second is BA Boeing, and here's our first Canadian depositary receipt of the day. This is the same Boeing that builds commercial aircraft, defense systems, and space hardware worldwide, just repackaged as a CAD-denominated share, so Canadian investors can hold it without dealing with US dollar conversion. Price is CAD 36.85 cents, down 0.6% today, sitting at 95.3% of its weekly classic R1 of CAD 38.68. And this is one of today's 5 confluence names, meaning Fibonacci and Camarilla pivot levels are also clustering in that same target zone, right alongside a monthly R1 of CAD 37.47 that agrees with the picture too. No Analyst coverage in our data. Beta 1.33, meaningfully more volatile than the broader market, which fits a large industrial name still working through well-known production and supply chain challenges. MACD positive, rating neutral. RSI 48.9, dead center. EBITDA up a striking 60% year over year, a real sign of operational improvement at a company that's had a rocky few years. Score 46, tied for our highest today, a genuine global industrial giant, accessible here through Canada's CDR structure. Third is BLK, BlackRock, the world's largest asset manager, running trillions of dollars through its iShares ETFs and institutional investment products, now our second CDR of the day. Price is CAD 26.47, up a strong 1.8% today, sitting at 93.6% of its weekly classic R1 of CAD 28.28, another Confluence name, with the monthly R1 at CAD 28.3 pointing to a very similar ceiling. No analyst coverage in our data. Beta 0.81, slightly below market average, fairly typical for a giant diversified financial services franchise. MACD positive, rating buy, RSI 55, healthy, dead center. EBITDA up 18%, though net income dipped a modest 2% with a 2.2% dividend yield. Score 45, the world's largest money manager, and our second reminder today that some of the biggest names in global finance trade right here in Canadian dollars. Fourth is CMGS, Chipotle Mexican Grill. Yes, the burrito chain, our third CDR today, letting Canadian investors hold this U.S. fast casual restaurant giant in Canadian dollars. Price is CAD 13.34, up a strong 2.6% today, the best daily move on today's list so far, sitting at 90.1% of its weekly classic R1 of CAD 14.80. This is another Confluence name, with the monthly R1 at CAD 14.77 telling essentially the same story. No analyst coverage in our data. Beta 1.2, close to market average, slightly elevated, consistent with a consumer discretionary restaurant brand. MACD strongly positive, rating strong buy, RSI 56.5, healthy. EBITDA down 3%, net income down 8%, a reminder that even a strong technical setup can sit alongside softer recent earnings. Score 44, a globally recognized restaurant brand most viewers already have a personal relationship with. Now our third CDR name in a row. Fifth is Visa Inc., the global payments network processing an enormous share of the world's card transactions, our fourth CDR today. Price is CAD 31.57, down 0.8% today, sitting at 96.6% of its weekly classic R1 of CAD 32.69, right at the edge of breaking through. Another Confluence name with the monthly R1 at CAD 32.98, agreeing closely. No analyst coverage in our data. Beta 0.36. Right at the floor of our acceptable range, remarkably low volatility for a stock this large, reflecting how steady and predictable Visa's payment network business tends to be. MACD positive, rating buy, RSI 56.8, healthy, comfortably mid-range. EBITDA up 13%, net income up 12%, with a modest 0.8% dividend yield. Real, consistent growth behind the numbers. Score 43. A global payments giant with one of the calmest risk profiles on today's entire list. Sixth is NSTL Nestlé, the Swiss food and beverage giant behind everything from coffee to infant nutrition to pet food, our fifth CDR today, and this one is specifically CAD hedged, meaning currency swings between the Swiss franc and Canadian dollar are neutralized for investors holding this version. Price is CAD 25.3, down 1.1% today, sitting at an extremely tight 99.1% of its weekly classic R1 of CAD 25.27. About as close to the ceiling as a stock can get without crossing it. The monthly R1 sits at exactly the same CAD 25.27. No analyst coverage in our data. Beta 0.44, low volatility, very typical of a massive, diversified consumer staples company. MACD positive, rating buy, RSI 57, healthy, dead center. EBITDA up a modest 2%, net income down 9%, with a solid 3.7% dividend yield. Score 43. A defensive global consumer staples name, and proof that today's CDR wave spans more than just American companies. Seventh is HD Home Depot, the home improvement retail giant, our sixth CDR today. Price is CAD 21.13, up 0.8% today, sitting at 96.2% of its weekly classic R1 of CAD 21.96, another Confluence name, with the monthly R1 at CAD 21.92 agreeing closely. No analyst coverage in our data. Beta 1.36, one of the higher beta names on today's list, consistent with a retailer whose fortunes are tied to housing and renovation spending cycles. MACD shows a caution flag here, the only name today without a fully clean signal, though the rating still holds it buy. RSI 53.5, healthy, dead center. EBITDA down 3%, net income down 5% with a solid 2.8% dividend yield. Score 41. A household name retailer showing a slightly less clean technical picture than the rest of today's CDR names, worth watching a bit more carefully. Eighth is VI Trust UN, Vital Infrastructure Trust, a genuine Canadian name again, an infrastructure-focused investment trust holding essential service assets, structured as a trust unit rather than a standard common share, which is what that UN in the ticker signals. Price is CAD 562, up 1.1% today, sitting at 96.8% of its weekly classic R1 of CAD 580, with the monthly R1 at a very close 578. No analyst coverage in our data. Beta 1.11, close to market average. MACD positive, rating buy. RSI 58.3, healthy, comfortably upper mid-range. EBITDA down 20%, but net income up a striking 78%, with a strong 6.5% dividend yield. A reminder that EBITDA and net income don't always move in the same direction in a single reporting period. Score 37. An infrastructure trust structure offering a meaningfully higher yield than the megacap CDR names we've covered so far. Ninth is CPH, Cipher Pharmaceuticals, a small Canadian specialty pharmaceutical company, focused on licensing and marketing dermatology and other niche pharmaceutical products, rather than running its own large-scale drug discovery pipeline. Price is CAD 16.97, up 0.2% today, sitting at 93.9% of its weekly ClavCAD 18.06, with the monthly R1 close behind at CAD 18.17. No analyst coverage in our data. Beta 1.17, close to market average. MACD positive, rating buy. RSI 53.6, healthy, dead center. EBITDA up a massive 167% year over year, and net income up an even bigger 231%, by far the strongest earnings growth we've seen on today's entire list. Score 37. A small-cap Canadian pharmaceutical name with genuinely explosive recent earnings growth hiding behind a fairly modest market cap of $430 million. 10th is CCL Industries, a major Canadian packaging and specialty materials company producing labels, packaging, and security products used by consumer goods companies worldwide, and one of the more industrially diversified names on today's list. It scores 6-1. Price is CAD 93.3, is sitting at 96.9% of its weekly classic R1 of CAD 95.97, with the monthly R1 close behind at CAD 94.67. No analyst coverage in our data. Beta 0.85, slightly below market average. MACD positive, rating buy. RSI 64.9, getting toward the upper part of our healthy range. EBITDA up 6%, net income down 7%, with a modest 1.5% dividend yield. Score 37. A genuinely global Canadian industrial name most consumers have never heard of, despite touching products on shelves worldwide. 11th is FF, First Mining Gold, a Canadian gold exploration and development company, and our first of two gold miners on today's list. Price is CAD 0.67, essentially flat today, sitting at 97.3% of its weekly classic R1 of CAD 69, with the monthly R1 slightly higher at CAD 0.71. No analyst coverage in our data. Beta 2.89, one of the highest beta names on today's entire list, right near the edge of our acceptable range, very typical of a smaller exploration stage gold miner whose share price swings hard with gold prices and drilling news. MACD positive, rating buy. RSI 59.6, healthy, comfortably upper mid-range. EBITDA down 33%, and net income down a dramatic 332%. The kind of swing that's common at exploration stage miners still working toward production, where a single accounting item can swing the bottom line sharply. Score 36. A high volatility gold exploration name. Watch this one alongside our second gold miner coming up shortly. 12th is AAPL Apple. Yes, that Apple, our seventh and final CDR today, and by far the largest company on this entire list by market capitalization. Price is CAD 44.36, down 0.5% today, sitting at 98.4% of its weekly classic R1 of CAD 45.09 cents, right at the edge of breaking through, with the monthly R1 essentially identical at CAD 45.16. No analyst coverage in our data. Beta 0.58. Notably calmer than Apple's typical volatility profile on its home U.S. listing, an interesting quirk of how CDR pricing sometimes behaves. MACD positive, rating buy. RSI 60.8, healthy, upper middle of our range. EBITDA up 14%, net income up 25%, with a token 0.3% dividend yield. Score 36. The single largest company on today's entire list, closing out our run of 7 Canadian Depositary Receipts. 13th is PRV.UN, Pro Real Estate Investment Trust, a smaller Canadian REIT, another trust-structured name focused on commercial and retail property holdings primarily in Eastern Canada. Price is CAD 7.11, down 0.6% today, sitting at 98.1% of its weekly classic R1 of CAD 7.25, with the monthly R1 close behind at CAD 7.27. No analyst coverage in our data. Beta 0.67, below market average, fairly typical for a smaller, income-focused REIT. MACD positive, rating buy, RSI 62, healthy, comfortably upper mid-range. EBITDA down 4%, but net income up a strong 60% with a solid 6.3% dividend yield. Score 36. A smaller Canadian REIT offering one of the higher yields on today's list, alongside genuine recent earnings growth. 14th is WDO, Wesdome Gold Mines, our second gold miner today, and unlike First Mining Gold from a few names back, this is an actual producing mining company with operating gold mines in Ontario and Quebec, not just an exploration stage story. Price is CAD 26.60, down 0.7% today, sitting at an extremely tight 99.4% of its weekly classic R1 of CAD 26.76, right at the very edge of breaking through, with the monthly R1 slightly higher at CAD 27.44. No analyst coverage in our data. Beta 3.08, the highest beta on today's entire list, right at the outer edge of our acceptable range, reflecting just how sharply producing gold miners can swing with gold prices and operational news. MACD positive, rating buy, RSI 52.9, healthy, dead center. EBITDA up a huge 79%, and net income up an even bigger 170%. Genuinely strong operating results behind this one, unlike the exploration stage swings we saw at First Mining Gold. Score 36, a real producing gold miner with the highest volatility and some of the strongest actual earnings growth on today's entire list. Two gold names, two very different stories. Our 15th and final name today is SIA, Sienna Senior Living, a genuine Canadian company operating retirement residences and long-term care homes across Ontario and British Columbia, tied directly to Canada's aging population and the ongoing demand for senior care housing. Price is CAD 22.67, down 0.9% today, sitting at an extremely tight 99.2% of its weekly classic R1 of CAD 22.85, with the monthly R1 essentially identical at CAD 22.90. No analyst coverage in our data. Beta 0.62, below market average, consistent with a demographically driven healthcare real estate business that doesn't move much with broad market sentiment. MACD positive, rating buy, RSI 56.2, healthy, dead center. EBITDA up 25%, net income up 32%, with a solid 4.1% dividend yield. Score 36, closing out our top 15. A demographic-driven senior care name with genuinely strong recent earnings growth, ending today's list on a defensive, Canada-specific note after our run of American CDRs. Let's step back and look at the full picture. 4 big observations from today's scan. First, nearly half the list isn't even Canadian. 7 of today's 15 names, Boeing, BlackRock, Chipotle, Visa, Nestlé, Home Depot, and Apple, are Canadian depositary receipts of major U.S. and international companies, not native Canadian businesses. That's the heaviest CDR concentration we've seen in any Canadian scan on this channel so far. Second, 0 top-tier hits and 0 analyst coverage. Every single one of today's 15 names landed in strong candidate rather than our top sharp target tier, and none had analyst price target data in our system at all, a genuinely cautious confirmation light list today. Third, 5 Confluence names. Boeing, BlackRock, Chipotle, Visa, and Home Depot all showed Fibonacci and Camarilla pivot levels aligning with the weekly classic R1. Interestingly, every single Confluence name today happens to be a CDR. Fourth, 2 gold miners, 2 different stories. First Mining Gold, an exploration stage name with a beta near 2.9 and deeply negative earnings, versus Wesdome Gold Mines, an actual producer with the highest beta on the list at 3.08, but genuinely strong earnings growth. A good reminder that not all gold sector volatility means the same thing. Today's scan is part of our Precision Target family, built around weekly pivot confluence. It does not predict when a stock reaches that target, and unlike our monthly scans, none of today's names had analyst price target confirmation at all, which is itself a signal to approach this list with extra caution. If you're considering any of today's 7 CDR names, remember, you'd be holding a Canadian dollar-denominated instrument with currency exchange considerations that don't apply to the underlying US or international shares. Factor that into your own research. Gold mining names like First Mining Gold and Wesdome carry meaningfully higher volatility, reflected in their beta readings near the top of our acceptable range. This program is not investment advice. Everything shared here is for educational and informational purposes only. Always do your own research and consult a licensed professional before making any investment decision. That wraps up today's Canada Precision Target Scan, featuring a list that's nearly half American blue-chip companies trading as CDRs, 0 top-tier confidence hits, and 2 very different gold mining stories closing things out. If you found this useful, please like and subscribe. We're now covering markets across North America, Asia, and crypto, with more on the way. Let me know in the comments which of these 15 names you want us to track going forward. Take care of yourselves and see you next time as informed investors.